Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 3rd of June, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the first week of June. And as we look across these two pairs, the spot gold has been recovering quite well from the start of the week until Friday. And that's where it made a strong pullback lower. And similarly, the dollar yen has been retracing lower until Friday, where it made a strong recovery back up into a key round figure. So the Friday moves were mainly due to the non-farm payroll report last night with the stronger than expected jobs added. So that's the reason why there's a significant pullback on the last day of the week. And we'll see if that's going to continue or whether that's just a blip in the week. And let's review what happened last week. What was the main trigger? And take a look forward for this coming week with any fundamental news coming up. All right, we start off the week with a stronger US consumer confidence figure, and but it was actually dipping lower from previous months, even though the forecast was fairly conservative. That was due to concerns with the debt ceiling, but that's been resolved now, so that should alleviate the situation. The Australian CPI surprisingly came out higher than expected. Well, perhaps not surprisingly, as UK did the same as well, and the US still staying quite high. Only the Eurozone CPI dipped lower than forecasted. And of course, the US ISM manufacturing is still contracting every month and still below the 50. And which we'll see, we'll compare this with next week, Monday, with the services PMIs. But the main highlight last week was the NFP with a significant number of jobs added, 339 versus 193. And even though there was a significant amount of jobs added, surprisingly, the unemployment rate picked up slightly higher, which maybe could be need additional figures from the total pool of available jobs and as well as the labor pool. But yes, this was a surprising figure that popped up higher. And this coming week, there's not much news from the US. It's only the ISM services, which is always strong. And the forecast this time is back up higher again compared with the actual for the previous month. And this week we'll focus on the Australian economy with the RBA perhaps pausing. That's the consensus, but with CPI higher, and they did already pause one time, so we'll see whether there's they'll pause again after the last increase. So this is a questionable one. We'll see how that will impact the the Australian dollar, and as well as the following day with lower forecast now for the GDP. So the outlook for the economy is not as strong as the early part of the year. So we'll compare this and see how that will impact the Australian dollar in the analysis. So let's move back to the analysis. Okay, beginning with spot gold here. And it has been finding support at the 1950 for a while until it started to dip lower and found the next zone of support where it tested it again on Tuesday. In fact, tried to dip lower with a false breakout here. Managed to climb back up and back into the 1975 round figure resistance zone, along with the 38 Fib retracement. Tried to continue to push up higher on Thursday, but then Friday non-farm payroll report data came out and was stronger than expected. And that could be a cause of concern for the Fed in a couple of weeks' time with their FOMC meeting, and whether they may consider increasing rate one more round for taking a break, or whereas the market was hoping to take a break now, but the economy is still strong with jobs still needed, job openings available, significant number of them. So we'll see if this support zone is going to hold this coming week after pull back below the 1950 round figure. And this area is at the 1935 or so, 1930, 1935 area. So let's see if that's going to hold. Let's extend this area out. And that's the 1935 to 36, and it dipped lower down to low of 32, just above 32. So this zone is still going to be interim resistance. Right above that at 2000, of course, is major resistance. So, but for now, 1975 is still a sticking point here. And that's just above the daily 55 EMA. And if it does break this support zone, the next key support is going to be at 62 Fib at around 1913. Of course, the bull traders would not want it to dip down back into the 1900. And on the weekly time frame, and it closed as a spinning top, not quite a doji, but with a long upper wick here. So there could be consolidation this week, as the with the other major pairs, due to lack of news for this coming week. So it could just toggle around within this range until the FOMC meeting the following week. That will trigger some major moves from there. Either way. Okay, so for now, swing highs are around the 1983 area. So struggling to hit 1985. But this significant bearish Engulfing candle on Friday is a cause of concern. Close back below 1950 to close at 1947.62. So this support zone needs to hold. Otherwise, if it breaks down, then it's targeting the 62 fib. But if it does bounce back up, it needs to break out higher above 1975, but doesn't seem likely for now. Okay, so let's compare this with the US dollar index, the DXY, see how that correlates with the spot gold as well. And here's the DXY. And after spiking through the 104, it was attempting to continue higher. After finding support at the daily 200 EMA. But then after Wednesday, started to retrace lower and a significant drop on the Thursday. And then dip back into the 103 level, hitting the 103 before finding support on NFP Friday and climbing back up to close back above the 62 fib retracement at and closed at 103.63. So that's a significant recovery here. So still there's hopes of further recovery back up, and because it closed back above the daily 200 as well and the 62 fib, there's still hope for continuation, and it needs to break above the 104 to attempt to test the 786 retracement at 104.40. So this is still an interim support level at the 62 fib. And of course, the 50 fib is a strong support right at the 103. And making its way up is the daily 55. And on the weekly time frame, as the euro closed as a doji for the week, the US dollar index closed not quite a doji, but a spinning top with a longer lower wick. So it could also consolidate this week with between the high and low of last week. And it's difficult to see if there's going to be a potential break back above the 786 or break down below the 103. So and this week there's only ISM services PMI on Monday, so there's not many news events to watch out for. So more than likely there could be just consolidation for next week until the following week with the FOMC meeting coming out. That will provide the impetus or fuel to either break out higher or break down lower. So unfortunately, it could be a consolidation week this coming week then, with the lack of news. All right, let's move back to the other pairs. Okay, moving on to dollar against Japanese yen. It has been retracing back lower after almost hitting the 141 level. Went up to a high of 140.93. It was on Tuesday after a spinning top on the Monday, just a pause, and then started retracing lower Didn't seem like it was done yet, and it could have continued all the way down to the 138 at this previous swing high, but thanks to the non-farm payroll data, there was a strong bounce back up right to the 140 round figure again. So this is an important bounce back. So we'll see if there's any continuation, bullish continuation move back up to test the 138 fib extension, or whether it's just a short-lived bounce back and then drop back down again to consolidate for the week until the FOMC meeting. So there is a this key support, I think, is will be very safe at the daily 55 as well. And let's extend this out to our this zone here. There is also a small interim support zone right here. Just an interim support. And for now, the resistance at the 138 fib, and above that, the key resistance at 142 round figure, which aligns with the 200 fib on this shorter reversal swing. All right, on the weekly time frame, see this bounce back up to close with a spinning top, but with a longer lower wick. So let's see if there's consolidation as with all the other pairs, or a continuation move, or just a retracement back again. And with only limited news trigger, so it's all based on price action for next week. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.